So let's have a little chatty chat about the proposed 50-year mortgage loan that Trump is floating. So this idea has been out for a couple days now, so I think we've had some time to think it over, maybe see what some of the risks and rewards of a potential 50-year mortgage could be. So I believe that the idea behind a 50-year mortgage compared to a 30-year mortgage is to stretch the payments out for 20 additional years, making the home more affordable because the buyer can have a lower monthly payment for their principal and their interest. This may be a good solution for some buyers who are just really close to qualifying, but just not quite there. Now, a potential downside to that is that over the 50 years, you're going to be earning equity in the home more slowly than a 30-year mortgage. We know that your initial mortgage payments are heavily weighted toward your interest, so you're not paying your principal down as quickly. So a 50-year loan is going to have you earning equity a lot more slowly. You are going to be paying a lot more interest over the life of your loan with a 50-year mortgage versus a 30-year mortgage. And I mean a lot, like 86% more interest over the life of the loan. It is likely that a 50-year mortgage will come with a higher interest rate than a 30-year mortgage because it is not a qualified mortgage or a QM, and it is riskier than a 30-year mortgage. So why would anybody want to do a 50-year mortgage rather than a 30-year? Well, it's going to depend on that person's situation. So I see this 50-year mortgage as just another tool in the toolbox of the mortgage lending industry. If someone is close to qualifying, but they just need that couple hundred extra dollars per month in cash flow, the 50-year mortgage could help them get to that. Some folks are happy to take that monthly savings from using a 50-year mortgage and put it into other investments with a higher return. We just have to be really mindful that if the market downturns, it could put you in a vulnerable position if you don't have that equity built up because you are in the longer loan term. Also, if you're paying a 50-year mortgage, then it's highly unlikely that you're going to have that paid off in your lifetime, considering the average age of a first-time home buyer right now is 40, although maybe with the longer loan and the lower payments, we'll be able to get some younger folks in there. But if you are looking to leave your property to your children once you pass away, that might not be as much of an option with a 50-year mortgage. So what do you think? Do you think this would be a good option for the market? Would it be a good option maybe for you personally? Or do you know of somebody who's been kind of waiting to get into the market, but their affordability is just not quite there? Let me know your thoughts.